All right, welcome. For everyone tuning in, we're going to go over how to repair your credit, how to build your personal credit, and how to fund your personal credit. So, first things first, who am I? For those of you who are tuning into this lesson, my name is David Samuels. I'm a credit repair expert. I've been fixing and repairing credit for over 7 years. And the value that I want to bring to this community is education, right? I think it's very important that we educate ourselves on how to build credit the right way because a lot of us either weren't taught this growing up or weren't taught this in school, period. Right? This is very vital because a lot of things revolve around credit. If you want a car, you'll need good credit. If you want a loan, you'll need good credit. You want to buy a house, you're going to need good credit. So today I'm here to share with you the knowledge I've learned over 7 years, and I've helped over, thousands and thousands of clients to improve their credit. And I'm here today to give you that sauce so you can go ahead and improve your scores like I've done for my clients and accomplish your goals. With that being said, let's talk about poor credit. So, a lot of us already should know this that poor credit will hurt us, right? It will stop us or hinder us from growing. Um, some of the things that poor credit does to us is it limits our resources. So we're not able to go out and network. We're not able to go out and, grow our mindset because guess what? We don't have the budget to support that. Speaking of budget, we can't advertise. So, our business, in order to grow, we're going to need to advertise that business. We need to stand out against our competition. And we can't stand out if we don't have a proper budget to do this. So, marketing and advertising gets cut, right? And then in terms of investment capital, so you want to go to the bank to get a $20,000 loan so you can go out and either start investing in stocks, crypto, Forex, real estate, whatever you want to invest in, you can't do that because guess what? You have a poor credit score and you can't get access to capital. And then you're limited in your access. So what can you access? You can't access this mastermind. You can't access, any type of mentorship because you lack the resources or the funds to do so because you have poor credit. So again, in our table of contents, what are we going to discuss tonight? We're going to go ahead and discuss how to repair your personal credit, how to build your personal credit, and how to fund your personal credit. Let me get a one in the chat if you think that having a poor credit score will affect your chances of getting qualified for a loan, a home, or a car. Okay, I'm getting a one in the chat. Beautiful. So, yes, your personal credit affects all these options for you. So, the first things first, we're going to talk about repairing your personal credit in this module. When it comes to repairing your personal credit, you can do this for free using AI resources such as ChatGPT to research these credit laws and then use them in your disputes. So, what does that look like? It looks like FCRA code 15 USC 1681 EB. This is a code that you can use to challenge any negative item on your credit report. Then you have 15 USC 1681 I7, right? This is if a negative item comes back after it's been removed. I tell every single one of my clients that I work with is look, the credit bureaus aren't in it to work with us. They're actually working against us by keeping our scores low so we can pay higher interest and higher loan amounts, right? They're more so working in the institution's favor because the credit bureaus are a business, right? A lot of my clients don't know that the credit bureaus aren't a government entity, they're a business. And any business, I don't know about you guys, but any business that I know about, they're not in it to do a free service, they're in it to make money. And how do they do this? By keeping your scores down. If you think about it, if all of our credit scores were on point, if all of us were above 700 credit score, would we really need the bureaus? No. So again, they're buying data, and we're going to go over this a little bit later. They're buying data, Frenching in on our reports, and keeping our scores low, so that way we can get caught up in this cycle. I want us to escape that cycle. So then you have FCRA, which FCRA means the Fair Credit Reporting Act, right? So the Fair Credit Reporting Act law 15 USC 1681B to remove inquiries and personal information off of our reports. Why is personal information so important? Because negative items can be tied to personal information, such as your old address or maybe even a misspelling of your name, right? Can be linked to that negative item. So if we work to clear up our personal information, this is the first place that I start with all of my clients is clearing up the personal information. That way, a lot of these items can fall off a lot quicker, right? If we get an old address removed that's tied to a negative debt or a negative collection, we have a higher likelihood of getting that item removed off of your credit report. So that's a little gem there. The credit bureaus use old information, such as old addresses and misspelling of names, to tie you to bad debt. Um, Step number two, you want to go ahead and file this multiple times at once. So sending a letter is cool, right? But that's not enough. You want to go ahead and fax those letters in to efax.com. You can use efax.com or humblefax.com and fax it to Equifax, TransUnion, or you can upload them directly to Experian.com. These are some quicker ways to get those deletions. So here's the fax number for Equifax and TransUnion if you guys need a little moment to copy that down. All right, moving on. And I would also go ahead and submit your disputes to the CFPB while you're at it, right? So you got sending your dispute letters out, you got faxing it in, and you also got sending your dispute letters to the CFPB. You just go to the CFPB, the Consumer Financial Protection Bureau website, and upload a copy of your letters. Now, step three, after you send it to the bureaus, you're gonna want to go ahead and freeze the secondary bureaus. So when I say secondary bureaus, a lot of people ask me, what do you mean by that? What I mean by this is TransUnion, Equifax, and Experian, they don't actually have any data on us, right? What they do is they buy our data from secondary bureaus, right? These are the bureaus, so they buy our data. These are the bureaus that actually house all the information on us, right? And it's in different segments. So you'll have a bureau that reports only utility bills, right? You'll have a bureau that, reports only medical collections, a bureau that reports repos and auto loans, right? We want to go ahead and freeze, right? Or opt out of data sharing for these secondary bureaus so we can get quicker deletions. And what I mean by this is if the bureaus aren't able to buy that data or get access to that data or verify your information from these secondary bureaus, you're going to get a lot of this information wiped off of your credit report because of that. If you go to this website right here, so here's another gem, zencred.ai, right? You can access, so if you click on Fix My Credit, you're going to see a little drop down there that says Bureau Opt Outs. You'll have six more opt out features that you can opt out of from LexisNexis, all the familiar secondary bureaus, LexisNexis, Innovis, CheckStream, SageStream, CoreLogic, and ARS, right? Clarity Services. And it'll tell you what they do. So let's say, for example, LexisNexis. LexisNexis collects and shares detailed personal and public records used in background checks, insurance underwriting, and risk assessment, right? If you're going to try to open a bank account, but you have some negative items, reporting like, hey, you missed a payment with a previous bank and you want to open up a new relationship with a new bank, right? You want to go ahead and freeze check systems because banks use check systems to verify data, but check system tracks your banking activity, including overdrafts, account closures, etc. and is used by banks to approve or deny account openings. Here's a little gem if you need it. This is if you burn a relationship with a prior institution. All right, so in this module, we're going to go over building personal credit. So we talked about repairing personal credit in the last module. In this module, we're going to talk about building. So we're talking about, those building blocks to get up to and over a 700 credit score. So when it comes to building your personal credit, you want to know what factors are, uh, you know, looked at when it comes to building or structuring a proper credit report. So with your payment history, this is what your credit report should look like. You want to be at 100% payment history. If you're not at 100% payment history, you need to look at the last module and how to dispute those negative items off your report. If you need to know how to get a copy of your report, you can go to annualcreditreport.com. You'll get one free copy of your credit report for the year, but you can highlight and look at what negative items are holding you back, what negative items are holding you down. If you want a monthly copy of your credit report, you can go to myscoreiq.com and it'll break down your credit report each month. You'll see what fell off, what stayed on, and what you need to continue fighting to get your scores up. So again, you want 100% payment history. Your payment history is 35% of your overall credit score. So this is very important that your payment history is 100% because it's the heaviest weighted item on your credit report. You do want a utilization under 10%. 10% is excellent, but if you have a utilization under 30%, that's good. So I always tell my clients the 10 to 30% range is where you want to be. Anything over that, and your credit will be severely impacted. Now, uh, what does that mean? Let's say, for example, you have $1,000 credit card. You don't want to spend more than $300 on that credit card because that is 30% of your utilization right there. A little trick is you want to continue to go and apply for more credit because that 30% can increase the more limits you have access to. So let's say, for example, somebody with $1,000, they'll only have access to $300 that they could liquidate. If you have $100,000, you could liquidate 30,000. And this is a little gem to as far as how you can get started in investing in stocks, crypto, or real estate, because you can have good credit while being able to use those funds to grow and build a legacy. Next, you're going to want to have zero derogatory marks. The average credit age that you're looking for is at least 5 or more years, right, of credit history. You can adjust this with an AU, an authorized user. You're gonna want your total accounts to be at least over 10 or 11 accounts, right? 17 is really good in this demo, but you want at least 10 or 11 accounts. And then you're going to want to keep your inquiries under 3 to 4 inquiries, right? Max. There's some cases where you can push it a little bit. Inquiries fall off after 2 years, so it's one of the least impactful things on your credit report. But when I am working with my clients, one of the things that we focus on is just the payment history and the utilization, because your payment history is 35% of your overall credit score and your credit utilization is 30% of your overall credit score. So between those two factors, you're at least a 65%. That equates for 65% of your overall credit score. Now, in order to build out your primary trade lines, you want at least 10 or more primary trade lines. I have listed every single company. I'm pretty sure there's more that you can go to in order to open accounts to build those primary trade lines. You have things like Chime, CreditStrong. I love CreditStrong because you can literally have a $30,000 trade line reflecting on your credit report, and all you're doing is paying over time. So it's like a forced savings almost. But once you get to that savings goal, whether it's 10,000 or 30,000, they'll give you your money back, which is beautiful. You have Self. You have rent reporters. I like rent reporters because if you're currently renting a property, you've been there, or an apartment for over 3 years, you can backdate your rent to when you first started renting your apartment, and it will report to the bureaus, TransUnion, Equifax, and Experian, and then your credit age goes up, right? So this is a little cheat code right here if you're looking for that credit age. And then you got, Tomo, Kickoff, Ava, and Kovo. Great options to check out. Now, when it comes to financial institutions, here are some things that you can leverage to your favor. You're going to want to go ahead and open up a secured card with an institution that you trust, right? Not every bank carries a secured card or has a secured card option, so you want to do your research beforehand. But a secured card typically costs anywhere between two to maybe $500 to open up a secured card. That's you putting up your own money, and what happens is they'll give you a credit card that you can use your own money with, but now that reports to TransUnion, Experian, and Equifax. The goal for these secured cards is not to touch them. A lot of people get access to the secured card and they're thinking, oh, I can run this up or I could use this however I want to. If you're going to use it, stay under 10, maybe 30%, right? And then pay it back off each month. I advise my clients not to even touch these secured cards, because the whole goal of it is in a couple months when the bureaus or when the institutions go and reassess you, they might increase the limit, right? They might give you a little bit more and turn it from a secured card to an unsecured card, which is what we're looking for, right? The bank's giving us access to their money so we don't have to use ours, right? And in most cases with a secured card, they'll give you your money back and just give you their 500 plus whatever extra they gave you on top. A couple good options is Discover. You have Capital One secured card, and then a few other options that you could look into to start building your credit a little faster. If you don't want to go the secured card route, is you can start doing secured loans. One of those secured loan options that a lot of people talk about is a Navy Fed pledge loan. So again, you're putting up your own money. Navy Fed will give you back your money, right? But they'll back it with their money, and then you just have to make your installment payments over time. This helps build your payment history, but if you can handle, the secured loan, they'll probably bless you with even more later on, and you don't have to put up your own money next time because they know you're good for it. So, Navy Fed is good for this, Penn Fed is good for this, Andrews Federal Credit Union is good for this, and then you have Air Force Federal Credit Union. And then another gem that's slept on in the industry is an authorized user. Not a lot of people know about what an authorized user is, or what it can do for you. An authorized user is, let's say, for example, I know somebody with great credit. They've been building credit over time. They're over 700. They have cards that they haven't touched for years, which is a gem, right? You would go to them and say, hey, I don't want access to your limit. I don't want access to the card. I don't want to even use the card, but can I get added on as an authorized user to this card so I can boost my credit? What will happen is, let's say, for example, somebody's in a 500 credit score. Once they get added to a good authorized user card, it could give you a serious point jump between like 30 to 100 plus points, right? If you get the right authorized user card added to your profile. What's important is that while you're on this authorized user card, from a friend or a family member, it's important that you advise that they don't use the card, right? Because if they use it and abuse it, that will negatively impact your credit score. So while you're building your credit, it's important that you have a working relationship with the person that you ask to be an AU on, so that they don't use that credit card. All right, so in this module, we're going to talk about how to fund your personal credit. Okay, so in the past modules, we talked about repairing your personal credit, we talked about building your personal credit. Now we're going to go into funding your personal credit. And what this looks like is you want to go ahead and build relationships with banks. I primarily love credit unions because they will give you multiple products with just one inquiry, right? So What we're going to do, the cheat code to this is you want to set up a checking account and a savings account. You don't want to just go ask for money. You want to build a relationship. A lot of us are used to just taking, right? You want to build a relationship, let them trust you a little bit, right? And then once they trust you, you go ahead and get that bag. So, what we want to do is open up a checking and a savings account. You're going to want to link your direct deposit. So, if you're getting paid, you have a W 2, this is even better, right? You link your direct deposit to that institution that you want to go after. You link it for like 90 days, right? And then you want to keep an average balance in that checking account of at least $500 and keep that balance in there for 90 days. Don't go touching that money. Let it sit there. Let it season there. Because when you are ready to go pull that trigger, they're going to look back and look at that history and see how you're using and how you're moving money, right? To see if you're a risk to them or not. But a couple banks that I would consider that do multiple products, one inquiry is Digital Federal Credit Union, right? You can get a credit card and a line of credit. Alliant Credit Union, you can get a credit card and a line of credit. And then Service Center Credit Union, slept on, you can have a credit card and a line of credit. Um, but let's talk about leveraging your scores. So we talked about repairing, we talked about building credit, but what's the use of having a 700 credit score if you're just going to look at it, right? If you want to, post up that score, like frame it or put it up, then this next portion of the slide ain't for you. This portion of the slide is for somebody who's willing to go ahead and invest, right? Like leverage your credit so you can go ahead and invest that money into a vehicle that works for you. So I call this strategy God mode. All the legacy masterminds in this group leverage this so that they can go out and start investing. So this is the God mode breakdown. One, we're going to get approved for high limit credit cards, which is what you see right here. I have $10,000 as just an example, right? But then you're going to liquidate the full balance of that credit card. A lot of my students ask, how do I liquidate? Here are two options that you could use to liquidate that credit card. You can borrow a loan against the card, or you can issue a loan through invoicing your business. This works if you have a business through Stripe, right? You can lend your business some money and then pay it back, tax free. Then what you do is once you've liquidated that $10,000, it's time to invest. But you're not going to take all your eggs and dump it into one basket, whether that's crypto stocks or real estate. You're going to only take half of it, right? Do not touch the other half. Put it in a checking or a savings account. So in this example, you got 5,000 working hard for you, right? Working to earn back some interest, or working on that double up, triple up. The other five is going to be parked in a checking or savings account somewhere that's going to pay back down that $10,000 that you liquidated. So on 10,000, that minimum monthly payment might be like $75, $150. That 5,000 is going to pay that off or pay the minimum monthly balance every month. So every month you're going to be on time once you set up auto pay, right? And then a lot of people ask me, hey, in call it 2 years or a year from now, once my money, has doubled up, but I don't want to touch it, how do I keep this going, right? How you keep it going is you probably have the 5,000 paid off on the card. What can you do again? You can liquidate that card, right? And put the 5,000 back into your checking account and you bought yourself more time. So this is why it's called God mode, because you're not using any of your money to build wealth, right? You're using the bank's money, but now you can grow and scale your empire, right? Or build a legacy. So that is God mode in its entirety.